Hi, and welcome to our next set of WELL webinar shorts. Today, we're going to talk to you about the American Rescue Plan, or the ARP. I'm thrilled to be joined today by my friend and colleague, Chris Condeluci, who is an employee and ACA legal specialist. I do, of course, want to show the disclaimers here, and we will get started. Throughout the shorts today, we're going to have 3 separate episodes, and I encourage you to listen to all of them. We tried to distill them into bite-sized pieces, so you can take a listen while you're drinking your coffee or driving on your way to work. As many of you know, the ARP encompasses a whole lot. So I'm going to turn it over to Chris to give you a high-level overview of what the ARP encompasses as a whole, and then let you know what areas we're going to dive into a little deeper. So Chris, take it away.
All right. Thanks, Sarah, and thanks for everybody for joining in. In the interest of short, we're going to be short, but we do have some information that we do want to convey. And really, the first and foremost is the American Rescue Plan. It was enacted into law on March 12th, and primarily, the American Rescue Plan included provisions that aren't necessarily healthcare related. They're more relief related, as well as attacking the COVID pandemic. And what we wanted to do with the slide that you see here most immediately is really touch through some of these non-healthcare related items, starting really with attacking the COVID pandemic. As we all been hearing in the news, vaccines, 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 go get them, big deal. Testing, which has been a big deal over 2020 and will remain to be a big deal as kids start going to summer camps, kids start going to school once the fall starts. So big deal there, right? And the Congress, as well as the Biden administration, threw a lot of money at vaccine distribution, vaccine advertising, encourage people to get the vaccine. Same with testing, boosting distribution of tests, advancing the different types of tests that could be made available, again, in the schools, before the summer camp, etc. And that's what you see here in this first part of the slide. In addition, there was relief, money given directly to state and local governments who took a big economic hit as a result of the economic downturn and the fact that there wasn't a lot of spending and therefore not much tax revenue. And oh, by the way, the state and local government had to spend a lot propping up their own public health capacity and trying to increase testing, make sure that the vaccine is getting distributed properly, and there's funding there. Business relief. Again, we all know that business took a big hit in 2020 and still we're recovering, although things are getting better, which is great, but we still have those industries that needed the funding, which the American Rescue Plan provided. Now, lastly, you see on this right part of the slide is there's individual relief, and this is what we want to focus on in our shorts. In short, no pun intended, the individual relief was intended to help folks with children in the form of a tax credit for families, in the form of a dependent tax credit and a dependent flexible spending arrangement for those employees. Also, it was intended to help those people who lost their job, and a particular benefit relating to unemployment, the $300 unemployment supplement. And then lastly, we see direct spending given to households, individuals, head of households, as well as families, in the amount of $1,400. And we do have slides on each of these, which we'll get into detail on. What we're not going to talk about in this particular short is the COBRA benefit and increasing the premium subsidies, although we'll touch on it in the recap. But what we're going to focus on here is what you see in the blue in the slide. Child care tax credit, dependent care tax credit, $300 unemployment supplement, and $1,400 recovery rebates, direct spending to the person. Go to the next slide for me, Sarah, please. So here's an example of the $1,400 direct payment. And why did we want to focus on this in particular? Well, this is money going directly to an individual or a household that they can then reallocate for health insurance. So as brokers, and you're talking to your clients, ask them whether they did indeed receive a $1,400 check. Now, the reason why you want to ask them that is because there were income limits on who is eligible for said recovery rebate or this direct spending. If you were an individual with income and adjusted gross income, mind you, which has a little bit of deductions in between there with the wages that you get, but if you're below 75,000, you get the full 1,400 bucks. Then as you go from 75 to 80 grand in income, it starts phasing out. And then if you're 80 grand or above, you get nothing. So if you have clients below this, talk to them about the amount of money they got. Married filing jointly, I'll just focus on that because that's, let's say, a family of 4. If you are making less than 150,000, you get 100% of the benefit here, the 1,400 bucks. And we're going to have another slide that aggregates the dollars because everybody in the household gets the 1,400 bucks. But as you go up the income scale from 150 to 160, it phases out. 160 and above, you're out. Head of household, same thing, typically for a single parent who is parenting a child in the household or multiple children. Go ahead and pull in the next animation for us, Sarah. So what you see here is you have some math. Now, I'm a lowly lawyer. I'm not good at math, so that's why I rely on Sarah to give us some of these numbers for me to talk through. But just in short, again, no pun intended, if I had an adjusted gross income of 145,000, which you see in the last bullet at the top of the page, you're eligible, right? Because I just told you that. And then I mentioned to you that the 1,400 bucks is available to everybody in your household. So if you have 3 dependent children and 1 dependent parent, you're getting a total of 8,400 bucks. Obviously, the 6 times the 1,400 bucks, and that's real money. And that's stuff that you can talk to your clients and customers about. Go to the next slide for me, Sarah, please. So again, we wanted to briefly tick through the stuff that I talked about at the beginning, and in particular, the child tax credit. Now, this obviously is for families with children. Now, there's a history of the child tax credit where Congress and the administration, be it the Trump administration or the Biden administration, recognizing that families need help, that prior to tax reform that came into the law in 2017, really effective 2018, there was a child tax credit, and you see that in the top pre-TCJA. You then see the tax reform, which is in the middle there, where the tax credit for the child tax was increased, and actually the refundability of it was increased. And then the American Rescue Plan took even a step further and increased the child tax credit significantly and made it fully refundable. Now, importantly, as you see on the right side of your slide, the expiration of the increased premiums or child tax credit, that is, child tax credit, is only available for 2021. There are proposals in Congress to extend this all the way to 2025, but that has not been enacted in the law yet. So don't get confused by that. The American Rescue Plan has been, so it's 2021. Go to the next slide for me, please. We briefly wanted to talk about dependent care tax credit as well, because child tax credit is money directly to the family. And there are age limits, which I did fail to mention on the slides before, where there are certain cutoffs with age. Children under the age of 13 and different ages going up to age 18. It has some variation on the benefit. So really, in general, if you're below that 13, you're going to get that full benefit. Dependent care, still a little bit different than age, right? It's just, is your child needing daycare? Is your child going to aftercare? Is there something with regard to summer camp? Because many dependent care expenses can be attributable to summer camp, and we're on the cusp of that. Well, this dependent care tax credit is really what you see here, and I'm not going to go into great detail, but it has been increased from $3,000 per child, if up to 2 children, up to $8,000. So if you have two children or more, you could get a pretty nice benefit from a tax credit perspective to help you offset your dependent care expenses that a lot of families are dealing with post-pandemic and during the pandemic. And again, we got summer camps right around the corner. And the last here is there's certain child care expenses that the child tax credit can be tied to or be used to qualify for, and that's what you see in the bottom of your slide there. So go ahead and go to the next slide for me, Sarah. And this is just the unemployment benefit, which we don't want to go into too much detail, but we didn't want to gloss over it or miss it. So if you are a self-employed individual, like a gig worker, there is actually unemployment benefits available to you in the form of these PEUC and PUA, the acronyms that you see on the left of your screen. And it's important to understand that even if you're talking to someone who's self-employed and purchasing coverage in the individual market, and they happen to have lost, much of their business, if not all of their business as a self-employed individual, if they meet certain requirements, of course, they're eligible for certain benefits through this pandemic unemployment assistance program, of why I wanted to focus on that specifically. And then on the right side of your screen are just unemployment programs for employees who happen to lose their job. And what Congress did is Congress went ahead and increased or provided an additional supplement to the typical state employment benefits that employees would be receiving. And so it's important to understand that there's that supplement, but it's also important to note that each of these unemployment benefits have an expiration date. I mean, you would have expected that, right? I mean, pandemic's not going to last forever. Economy's going to improve at some point. So there is a cutoff date, and you see in the employee side available through Labor Day, and similarly for the self-employed side on the left side, you see that these benefits are available at least through September. So that's the unemployment piece for you. Go ahead and go to the next slide, and I think this might give me an opportunity to turn it over to Sarah. Oh, Sarah, you're on mute.
Oh man, that's typical pandemic, isn't it? But I was saying, I sure hope the pandemic doesn't last forever. Thank you so much for walking us through the American Rescue Plan at a high level. Just to recap, with the ARP, you have increases in subsidy. It's going to increase the population who's eligible. We're going to talk more about that in future slides. As Chris mentioned, there is a lot in the ARP that's outside of healthcare, and so we did want to share that with you today. If you are looking to help your clients enroll in subsidized ACA coverage, Well can help you. Chris, thank you so much for your time, and we'll see you all at our next Well Shorts.